September 16, 1992, known as Black Wednesday, was the day speculators forced the British government to pull the pound from the European Exchange Rate Mechanism, ARM. With costs of around £3.3 billion, Britain's central bank was unable to defend itself from an attack in the currency markets. Soros made more than $1 billion in profit as a result. Britain raised interest rates from 10% to 15%. The country was arguably thrown into a recession afterward. Many British citizens began referring to the ERM as the eternal recession machine. Before we start the story, let's discuss what is ERM, European Exchange Rate Mechanism. In simple language, it is the process to control currency fluctuations. It was started in 1979 so all European countries could move to single euro currency. So rate set for Britain was 2.95 Deutsche Marks per pound sterling with a 6% permissible move in either direction. Problem for Britain was that the country's inflation rate was high, and interest rates were over 13%. The country's economic boom was far into a period of unsustainable growth. This set the stage for a bust period. Currency traders took note of these underlying problems and began shorting the pound. More specifically, they bought one currency, such as the mark, using the pound. This allowed them to profit as the pound fell in value by comparison to the other currency. Leader of Bear Pack was George Soros, born in Hungary in 1930. As a young boy in a Jewish family, Soros survived Nazi occupation, thanks in part to falsified identification papers. He shorted position of more than $10 billion worth of pounds. Black Wednesday is well known as the day that Soros broke the Bank of England and made over $1 billion. But the real lessons are found by taking a look into the underlying causes of the crisis and how they quickly led to problems. Black Wednesday teaches a number of important lessons to both currency traders and governments. Some of these lessons may come as a surprise. Lessons for governments might include: don't dictate interest rates. Govt should not dictate rates and it should left on market to establish rates. Pick your fights against speculators. Taking extreme measures to counteract decisive market action may be in vain, plus, it can be costly. Lessons for currency traders could include: nothing's impossible. Britain leaving the ERM was unthinkable to many during the crisis, but even governments make big mistakes. Be ready for extreme measures. Britain's decision to raise interest rates from 10% to 12% to 15% in a single day shows potential government resolve. Thanks for watching this video. For more such videos, please like, share and subscribe.